A wonderful good morning, ladies and gentlemen, and welcome to NAGA and Markets for Breakfast. My name is Alex Duidari, and today it is Christmas, December the 24th, 2019. Ho, ho, ho. It is today where lots of, child dreams come true, hopefully. Is it going to be a day like that for us? Well, I wouldn't expect all too much to happen on the markets, to be precise, but there are some things that I would like to bring your attention to here. First of all, as we see, Sven Henrik is posting here, trade optimism was maybe, it could be the word of traders in the year 2019. And Reuters was reporting about 14 hours ago that the S&P not just another record high as Trump fuels the trade optimism. So Donald Trump was positive about China starting already to remove some tariffs, and that hopefully the US can move faster, lowering tariffs as well now. And yeah, we'll see. So that was trade optimism. But really, what we see here, and even though Sven Henrik has a little bit of an ironic way or cynic way to put it. It was a year of a lot of appreciation of prices, and an appreciation of prices that are it has to come from somewhere, and it's not really coming from something that is healthy. And that is why the mountain of debt that CNBC is showing here, just for credit cards, it's growing and growing and growing, and it's really wherever you look, there is imbalance in the market. So the question is if these markets are able to continue like this. Oh, by the way, he even calls himself an occasional sarcasm, so I guess he's not lying about it. No, but to look at a couple of things, like for example, what we see now is that this is an interesting chart here. The Spider ETF took 11 billion on Friday. This is the biggest one-day flow in years, and the fifth of all time for an ETF. It's more than all but 3 ETFs took in all year. So that means money is pouring into the S&P 500 in a way that we've really haven't seen before, like or only like a few times ever, and that comes at a stage where companies are actually making less and less earnings per share, the overall economic situation seems fragile and only artificially boosted by the central bank, mainly in the US. And that is really, really, really crazy. And on top, there's something else I want to look at. We can look at this here. If it loads, the bear hibernation. So the spider shorts dropped to the lowest since October as S&P 500 reaches all-time highs, new highs. So not only there's so much money going into the S&P 500, it's also the shorts on this spider have dropped to its lowest since October. So people are rushing to buy. They are buying the top, and if everyone is running to buy something or to do something like that, then me as a trader, I have to say, that's when I really want to shy away, because that's when you really want to take a step back and make sure that you're not caught up in the frenzy. And I remember the last time like that was 2017 in Bitcoin. Nobody thought it could ever, 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 ever drop again. Everything was going through the sky. Every altcoin, Bitcoin, whatever you call it, whatever coin, it's going to be bought. And then it dropped, and 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 it continued to drop. And actually, at the end of the year 18, we were down to 3K again. And this year, okay, we came back up, so we're trading above the 7K. But even this year, we went all the way up to 12, I believe was the highest. So these things happen. So are they going to happen to the S&P 500 and the other bigger stock markets? Because Bitcoin is a little bit of a play compared to the enormous size of market capitalization. We are talking trillions and trillions of dollars here. And really, I am more worried than partying about how these markets are behaving. And here we have the S&P 500. Going further up here, here we go. So we saw yesterday we reached 3,230, and then we dipped like literally nothing, like 5 points, which is really nothing. It solves like here we go. So but you can see already that it's not too much of a movement here, and really, I mean, markets already thinned out very heavily yesterday, and they continue to thin out today, obviously. But you know, even though stock markets are going up, it is still the year of rising prices. So stock markets went up, bond prices went up, commodities went up, even gold. I mean, look, gold continues to show that it wants to trade higher. We now reached the 1490. We talked about it yesterday, and again, please, after we got over these recent highs, and now you tell me, like, how can we have a stock market with a record influx of money, with a record low positioning of shorts, and still the gold price going up? These things don't go with each other, like, not really. Or is there so much money that everything is being bought? Like, okay, we don't know for sure, but this is a development that it cautions me. Again, and I've mentioned it before. So I'd rather buy gold further up into the 1500s than to stay in the stock markets. Even though probably if the craziness, the frenziness remains, the stock market remains the one with a bigger return on it. Otherwise, you know, as they say, no risk, no fun. I'm not sure if it's so much fun just to take blindsided risk, but yeah, it is what it is. So, and that I do my job in order to talk about these things as I see them happen here. Elsewhere, what we see is that in the currency complex, there's not too much movement. So yesterday, the dollar index, here we go, basically went nowhere at the end of the day, and that's what we're seeing here. Like, even Australia, Kiwi, not moving all too much. Yesterday, when we look at the calendar, we talked about Canada, the Canadian GDP. Wait, let me just reload that one here. Dear calendar, can you please show us your beautiful face? Okay. No, I interrupted it myself. There's actually a German word for it called verschlimmbessern. It means you make stuff worse while you try to make it better. So here we go. Take some time. Here we are. So yesterday, Canada GDP came in a little softer. The month-on-month. The year-on-year came within expectations, and that's rather positive. But the durable goods out of the U.S. came in weaker. So that means the idea for the dollar CAD trade didn't really pan out because Canada wasn't showing a lot more weakness, and the US showed weakness instead, and that's why it canceled out that trade for me and really didn't happen. But you can see, like, even the oceanic currencies, even the Turkish lira, it's not really going anywhere too much, even though from those swap developments we should see a lot bigger setbacks. We're not. So everything has gone into hibernation, I would say, so they're enjoying the holiday now. We're not seeing all too much movement here, even in the where is oil? Here we go. Crude oil yesterday. 1 second. It's basically really just gold in the stock markets that's showing some decisive movement here. Yes, oil recovered yesterday to some extent, but again, not too much, and we're still below that important 60-80 level that was a resistance earlier, and now continues to be. So we see a little bit of a recovery after the latest setback, but I wouldn't expect too much of a movement here. So especially today's even half a day compared to what yesterday was. So let's see how or if we're gonna get any type of really movement here. And yeah, the never sleeping market, which is obviously the crypto market, continues to show not really clear direction. So yesterday Bitcoin showed that it wants to break out to the upside, but it failed again miserably at 7,600. We never even got close to the important 7,800 or 8,000 level, and that again makes it quite clear to me that we still are within reach of the downside risk to break the 7K to the downside. So, you know what they say, what doesn't go up comes down. If it has to happen over Christmas, I don't know, but difference about Bitcoin to other markets is that it's actually trading over Christmas. So you should definitely make sure that you know that, and yeah, see where your positions are at. So in my opinion, anything is possible here right now. It's quite neutral. It's not really showing big signs of weakness neither. Otherwise, if we look at it on the underlying trend, which is clearly negative ever since we went up in July, and 12,000, 14,000 almost, sorry. But then you can say, then you could rather think that this could be a continuation, you know. And again, do you know, by the way, that Bitcoin, despite losing this much, is still the best performing asset of the year? So because this is where we started, right? So somewhere around 3K. 3.6, 3.5, and so for that it more than doubled, or it doubled, but it's still, you know, from a crypto perspective, it's still very, very close to downside risk here, and that's something I wouldn't want to forget just because I'm having a good meal with my favorite people. So pay attention to that. This is a market that will and can actually move over the holidays. The rest of the markets not really. The storylines is thin. There's still euphoria in the market. As you said, as I showed you, there's a huge positioning in the markets, huge influx of money. Nothing really new here to report, and the likelihood of stock markets to see more upside from here is still quite big. The question is, what does it take to derail this thing? And I think that's a question that we will have to discuss on a daily basis going into the new year, because then we will see if what the Fed is doing will actually be enough and work, because eventually what they're doing is they're plastering everything with money in order to try to in a way, hide weaknesses, or try to get them, you know, to work somehow. And that will be enough eventually, compared with the amount of money to the amount of earnings to the economic growth must not stop. If it stops, then that would be really the end of the financial system, maybe even. It's that bad. So that's why it continues to be very, very exciting. It's exciting times, exciting days. And we have actually the possibility to participate, to partake in this, like you know, with our platform here, with our social trading platform, exchanging opinions, being right on the money every single day here of what is going on, what's moving, what's not. And that's something that wasn't really the case only a few years ago. So I hope you're enjoying it just as much as I am. So I want to say thank you very much for coming here day by day this year. And I wish you a great holiday with your loved ones, your dear ones, a happy new year. And we'll be back here in the new year. Looking forward to rocking those markets. Thank you very much. Bye bye.